Okay guys, welcome to the channel. Thanks for tuning in. Today's video is going to be a collaboration video with Wolves of Crypto. You're going to be hearing this on his channel as well. We're going to be posting on both of our channels. So remember, like, follow, subscribe, both Wolves of Crypto channel and mine. Today's video is going to be an update. I'm just going to introduce Wolves of Crypto real quickly. Wolves, you there, mate?
Hey guys. Yeah, what's going on? Back at it again. Wolf-Whale, Whale-Wolf collaboration, broader market, Bitcoin, altcoins, interest rates, everything today. So, yeah.
Cool. All right, so we're going to start off by taking a look at the Bitcoin chart. And of course, I don't know if you watched some of my videos on the last 24 hours, but we did a little update telling you guys about this major resistance zone, which I've indicated as this gray box. I'll quickly circle it a little bit over here for you guys who haven't seen the video. And we told you guys that if we had to break through that $45,000 range, which is this lower resistance line, we would see an explosive move. And my target was up above and into this range here. And we have currently seen that the question is, what's going to happen next? And I indicated a few possible scenarios. The first one was that we'd find a bit of support over here before moving upwards. The more probable and likely scenario was that we'd actually retrace back into the zone before making another move. It's a little too soon to tell. Of course, I'll let Wolves expand on, I guess, the entire market sentiment. I know a lot of people are kind of flipping bullish. And I think it's really important to make a distinction between bullish on different timeframes, because timeframes do matter, and you got your longer timeframes and your shorter trends. And yes, are we bullish on the short-term time frame? Absolutely. Are we bullish on the macro time frame? I think that's a different question. I think I'll let Wolves cover that. But the short answer is no, we're not quite yet bullish on the macro time frame. And after Wolves covers that question, I'm going to bring it back to me, and I'm going to show you a few reasons to why I think the bearish scenario is still possible. But I've been saying for the last few weeks, guys, we need to remain cautiously optimistic. Until we get that trigger zone broken, until our macro trend is bullish, we need to be aware of both scenarios and not put all our eggs in one basket. All right, Wolf, I'm going to chuck it over to you if you want to talk a little bit about, the trigger zone, where we need to get over to be, properly bullish again, and maybe a little bit more stuff if you want to go ahead and talk about it.
Sure thing, yeah.
So
I'll just share my
just
screen.
remember to screen. Yep, remember to screen share it.
You might need to make me host quickly, or
let me. Sorry, guys. Let me actually figure this out. It's been a while since we've done a collaboration. Here we go. All right, you should be able to share now, Wolf.
Sweet. All right, you got that there?
Yep.
Awesome. Okay, so now, let me just start by saying, I suppose in terms of the macro structure, now I've kind of got his channel there. Now I've relied quite a lot in my channel on the 50-week SMA, all right, which is this red line here. And I wish I could show you a better chart of it. I actually will just bring up another chart quickly. The 50-week SMA is essentially a red line that I'm going to bring up. 50-week moving average on the weekly chart, and we'll jump on the weekly time frame right now in just 1 second. And essentially, the reason why I've relied a lot on this is because this market has acted very similar to the 2018 market in this bear market right now. Now, the 50-week moving average is essentially what I've based a lot of my prediction on. And I've said that once we get above that, which I've actually been able to do on this weekly candle close, we can start to consider the more bullish macro scenario. Does that mean the bullish macro scenario is confirmed? Not necessarily. And I suppose we're going to be looking into that a lot in this video here. But I suppose to expand upon what MegaWhale said, shorter time frames is always a little bit more, flip-floppy, in the sense that, on a shorter term time frame, when you bounce off the bottom of a structure like this, debating whether this is a channel or an ascending triangle or an ascending wedge, there's lots of debate about that. You could even draw it as an ascending channel or ascending triangle, as I've done before. But, when you bounce off a major support zone, like we see in a bounce off the bottom here, you have to be kind of bullish to a certain scenario and to a certain sense. And this is why we both have VIP channels. We both have Telegram groups. We actively trade altcoins. But yeah, in terms of the macro picture, there are obviously different targets that you need to be meeting. And so when, specifically me more directly, but I suppose you to a certain extent, have said, the market is in, whatever you want to phrase it, or has been a little bit in a bit of a debatable state in terms of the macro debatable state, that doesn't mean you shouldn't be entering positions or trading. That just means you need to be cautious about entering longer term positions, and you need to be aware of the differences between risk and reward ratio, on certain coins and on Bitcoin, etc. Now, it could be argued that the important region right now for Bitcoin, in order to turn macro bullish and like longer time frame bullish, right, is around 47, 48K. One of the main reasons being, in my personal opinion, is because that is where the POC is, which is basically the area of the most historical trading volume throughout the entire of the bull market from 2020, 2021, and this year, meaning it's the area of the most resistance on the chart for the last 2 years, which is pretty major, right? It's like the dividing thing that cuts the whole chart in half. And so flipping that is undeniably a bullish step in the right direction. But as of right now, yeah, I think we do need to be cautious still, because that hasn't happened yet. And yeah, we've had some preliminary breaks, and something like the total cryptocurrency market cap, for example, has broken out of some sort of triangular structure with a major uptrending level of support as the support line, and then a resistance line coming from like January. You know, that's undeniably bullish, but that's kind of a bit more of a short-term bullish thing, right? The macro structure, we always have to look at something like Bitcoin when it comes to something like this. But yeah, I'll let you expand a bit more upon your Bitcoin chart, and then I'll jump back in and I'll talk about something like the 4-year cycle theory and the 2018 similarities later on in the video.
Yeah, I think it's I think it's important to mention as well, if we take a look at the 200-day moving average. And, you know, we've talked a fair bit about the 200-day moving average in general on, you know, larger time frames and smaller time frames. But in general, the 200-day moving average being quite a slow moving average is used preliminary, like mainly to indicate major market shifts. In the sense that generally when we're above the 200-day moving average, we are in a macro uptrend. And generally when we are below the 200-day moving average, we are in a macro downtrend. And if we're going based off the 200-day moving average right now, technically we're still actually in that downtrend on a macro scale. We haven't quite flipped that trend. And if we take a look at where the 200-day moving average is, it's sitting just above this major resistance zone. And that's why I've been saying, you know, be cautious until we get this break above, a retest and continuation, because until that happens, we are technically still in a macro downtrend. We are technically still macro bearish. And I don't want you guys to mix that up with short-term bullishness. I've been short-term bullish for a while now, but on a macro scale, I'm definitely still cautious. I think it's important to also note that the formation we are forming here is in fact a bearish ascending channel. And a bearish ascending channel is very much what we're seeing here. And we can definitely see this candle, this daily candle, close below and continue downwards and drop through this level. That would, of course, bring us back into that bear market territory, back into those lower predictions of about 22,000 and 26,000. Of course, there's a lot of indicators on that shorter time frame that are suggesting bullish price action. And of course, those larger time frame indicators are lagging. Of course, longer time frame indicators lag compared to the short-term time frame indicators. We've got those indicators on the short-term time frame continuously showing the same pieces of data over and over and over for extended periods of time. Eventually that translates to the longer time frame. So if you're just looking at, you know, like the weekly chart to try to predict short-term price movements, you're always going to miss the moves. Vice versa, if you're looking at the daily chart to predict longer-term price movements, you're never going to be quite right. So you have to use the appropriate time frame for the measure you want to actually try predict. And I think that's a very important distinction, which I've kind of covered already a little bit, but I want to go over a little bit more, because a lot of people kind of collude these ideas of being bullish and bearish into one thing, and it's like either you're bullish or you're bearish. But the reality of the situation is that we have absolutes on charts, we have objective facts, and then we have our subjective perspectives and obviously the information we can derive from the data on the charts. And what we know for a fact, I want to go over this one more time, is we know for an absolute that our resistance range is here and our support range is here. That is all we kind of know right now. In between, we are just trending in a neutral range. And I posted on Twitter and in my Telegram the other day that, you know, anything above this gray box is bullish, anything below this gray box is bearish. And that is kind of precisely how you should be looking at the market right now. You shouldn't be looking at this and saying, I'm macro bullish now because we had a short, you know, price explosion on the short term, and therefore I'm going to be buying into the market now because I expect it to go to 100K. What that's doing is you're kind of cutting your feet off. You're ignoring the other possibility, even though we haven't had confirmation of the perspective and I guess idea that you are expecting to occur. So I've got an alert going off. Sorry about that noise. And Wolf, do you think that's a viable statement? You know, always wait for confirmation before making these these grand decisions, especially on the macro scale. A lot of people FOMO in when they see these green candles, but they don't really think about like what is actually occurring in the market.
That's correct. Yeah. Well, I mean, we were discussing before we started this video here that a lot of people, especially inexperienced traders, and it's no offense to people who are inexperienced traders, that's just kind of what it is at some point. They struggle to understand that there's a complete and utter difference between short-term and longer-term confirmations and trends. If you're bullish on, for example, the 4-hourly chart, that means you might be bullish for the next few days or the next week. Whereas if you're bullish on something like the daily or the weekly chart, you're bullish on a much longer time frame, much longer scale, and you can definitely have different biases on different time frames. And that's something you need to come to terms with if you're going to become a successful trader for sure. And I'll share my screen. And I suppose one of the reasons why so many people have had so much trouble in this range, well, first of all, it's a range, right? And people hate ranges because, that's just the most confusing thing ever for people who are inexperienced in the market. And even for experienced traders, ranges are specifically quite daunting to trade. There's no clear direction. But one of the reasons why this is so hard is because you could look at it and say that, and this is just the hourly chart, right? Or over the course of the last couple of weeks, you could say that, well, we had a clean bounce off the bottom of support that I showed on a daily chart before, but at the same time we had this whole structure here, this whole ascending channel structure throughout the entire time that kind of plagues your thoughts and kind of thinks you kind of have to come to terms with that and start to think about the bigger scale. But when you look at something like the hourly chart here, you have a bearish structure, you have low volume, and you need to find a way to kind of weigh that up with the bullish things that are going on as well, because they are bullish things and there were bullish things at that point in time, but a lot of people would have trouble with that. But I suppose if we jump into something like the weekly chart now and, talking about timeframes, we need to talk about the bigger timeframes as well as the smaller timeframes here. But, we do have to talk about the 4-year cycle. A lot of people don't like when I bring it up because it is something that, I think generally speaking, there's a lot of hate in the community and in any kind of financial market community towards fractals of any degree, because they are, very unreliable. And when they don't work, people like to discount them immediately, like we saw with the 4-year cycle in the last bull market. A lot of people would use measurements of the 4-year cycle using percentages, and that was invalidated entirely because we didn't have a blow-off top in the last bull market, really. I mean, not one that was conventional with the last 2 cycles, but using it with a date range rather than a percentage, you can see there is a clear trend here in crypto, although a lot of people would like to deny that. And the trend is, I mean, I can break it down, and I probably will. It'll just take 2 seconds here. We have from top to bottom 400 days, from top to bottom in the next cycle 400 days, and then speculating top to bottom will be taking us to November 2022. That will be roughly 400 days as well. And then the number 1,400 comes up multiple times from bottom to top and bottom to bottom, etc. And then from bottom to top in the 2015 to 2017 cycle, we have exactly 1,064 days, and then from bottom to top in 2018 to the last bull market top, we have exactly 1,064 days as well, right? So there is a clear trend, but again, at some point you have to weigh this up, and you can't rest everything on a longer time frame, because as MegaWhale said, if you're constantly looking at the weekly time frame, you're gonna miss the shorter term moves. And yes, it might be a pretty good indicator of the macro structure. More so than something like the 4-hourly chart, but you want to be catching those short-term moves as a trader. But there is reason to believe at this point that we are technically still in a bear market, right? I mean, by my definition of a bear market, I'd say we're still in a bear market, even with that close over the 50-week SMA. But I would say there are many bullish things emerging that we need to be watching very closely, and that 50-week SMA break was one of those things. Now, if we look at something like 2018. Look at 2018, for example, here. We had the breakdown of this red line, the 50-week SMA. We broke down, we saw a short-term bottom, we came up and we tested it for support before rejecting. Now, we've had a similar thing, except we've actually broken up. We broke down, we came up, tested it for resistance, and we've actually broken to the upside. So there are differences that are starting to emerging from a 2018 bear market, which is interesting, right? Because if you look at the 2018 fractal that I've taken out right here, this purple fractal from that period, and you apply it right to the current price action, until this point, until this breakout, it has been extremely similar, right? Practically identical. And so having some of these differences start to come to light here is quite interesting to see. And that's what I'd say about it. Now, I think it's too early at this point to tell whether the entire macro trend has flipped. I think it's too early to tell whether this is caused by manipulation and irrational price movement, but it is something we need to watch closely. And specifically right now, I mean, Bitcoin's pumping right now, by the way. specifically that 48K region. I don't have the right chart up, but that 48K region where the 200-day SMA is very important at this point in time, I'd say.
Yeah, and I would just go. I want to bring up my screen for a second and just kind of share, like, I guess maybe I can go over all the bullish indicators, and you can just take a look at. You just talked about some of the bearish stuff, but a lot of the bullish indicators we're seeing on the chart, I'm going to bring them up now. And one of my favorite ones, I guess, is the Gaussian channel. Now, I love, for you guys who follow me on my channel, you know how much I love the Gaussian channel. And we've been telling you guys that we're probably going to see a break above the Gaussian channel as soon as we kind of flip this midline over here back at $41,000. And the reason being, I just want to say this, all technical indicators, as well as actual market structures in cryptocurrency and financial markets are invertible. If you know what that means, it means you can flip them and they can mean, basically, if you look at like a math equation, it's invertible, like 2 times 3 is equal to 3 times 2. It's the same thing. If you have an ascending channel and a descending channel, they're essentially the same structure, they're just inverted. And we can see that with the Gaussian channel. And I'll show you an example if I didn't quite make that very clear. This entire move from over here upwards, all right, and then obviously into the Gaussian channel and down is essentially the same thing, all right, as this entire move here into the Gaussian channel and up. It's literally just inverted. So when we see these moves going up and then these strong moves going down, we can assume breakouts are going to occur through the channel. So when we see these periods of price action where we have a long extended period of time underneath the Gaussian channel, we have to assume that it will actually eventually break through the Gaussian channel to the upside. Just as if we see these long periods of price consolidation, which we saw in 2 instances, over here and over here above the channel, we have to assume that when the price breaks into the channel on 2 occasions, we have to assume that the price will continue to the downside. And the Gaussian channel is one of those indicators I actually use on both occasions to predict these tops and the exact moments of these drops, because the Gaussian channel, when used correctly, is incredibly accurate at predicting overall market direction, trend, and momentum. And we saw exactly the same thing happen here. And we were trending within the Gaussian channel for a very long period of time over here. Usually it doesn't trend in the channel. It kind of pushes through the channel like we saw over here very quickly, or it can push through the channel here like we can see very quickly. But we don't usually see the Gaussian channel, the price action remain inside the channel for a long time. We had that support resistance flip on the midline and resulted in a push upwards. So of course the Gaussian channel is looking very bullish. I wouldn't be surprised if we see the channel flip green within the next few days. Moving on to the larger time frame, like if we take a look at the 3-day chart, we can see that we have a major resistance coming up. And I've pointed this out already, but the 200-day moving average on the daily, this resistance range, and then obviously the midline on the Gaussian channel, all line up with $48,000. And no, Wolves, was it the 50 SMA you just said was the 48,000 as well?
The 200-day on the day, 200-day SMA on the daily chart. And then if you look at the 3-day as well, the 50 is quite important.
The 50 on the 3-day. They all line up at 48,000. We know that 48,000 is going to be a very, very strong resistance zone. We're going to zoom out a little bit and take a look at the Ichimoku Cloud. And of course, if we go to a 3-day chart for that Ichimoku Cloud, we can see that we have, in fact, had a few interesting things occur. We've had, first and foremost, we've had our crossover with our baseline and conversion line indicating a buy signal, and that happened just as we pushed above the 41,500 major resistance zone. If we zoom out onto the 7-day chart, we can see that this entire time we found nice and strong support on the lagging span, so span B. Now the lagging span makes up the bottom line of the cloud. The span A makes up the top line of the cloud. Usually the spans are used to find major support and resistance zones. And of course, the fact that we've been able to hold above that lower span, so that lagging span B, basically for an extended period of time, about 4 weeks, was quite a significant sign that we had found some major support down there and that we were moving up. Did we want to talk about RSI and that kind of stuff? Wolf, we're not going to really worry about that.
I don't think we need to worry about it unless you've got something you want to say about it.
Yeah, I don't think so. I do actually want to bring up, I think it was the daily. Let me take a look. I haven't really prepared any charts for this, so just kind of winging it.
Yeah.
Let me bring up
freestyle.
I think it was the daily or the 3-day. I can't quite remember. Oh no, it was in fact this chart here. So if we take a look at the RSI, and I know Wolf has talked about this, we've all talked about this many times, but the RSI can be used to draw market structures and support and resistances that reflect or do not reflect the current price action in the charts. Of course, the RSI is used to signal whether an asset is overbought or oversold, but the price action on the RSI does actually indicate or reflect the price action in the chart. It just doesn't take into consideration the actual asset price. So therefore we do see, although we see upward and downward moves reflect, we don't see the extent of these moves or the height or depth of these moves reflect in the RSI. And therefore we can actually find market structures or resistance zones that are somewhat not present on the standard price chart within the RSI that can potentially sometimes lead to more sustained and significant breakouts than if we see a normal resistance break on the price chart. I hope that makes a little bit of sense. But for example, over here, we saw a descending resistance line on that RSI with 4 separate resistance tests, followed by this recent breakout on the 23rd of March, which happened to also be the time that the midline broke on the Gaussian channel. It also lined up with the time the $41,500 resistance broke, and that is what kind of sent us and propelled us upwards. The fact that we broke out of that resistance on the RSI was probably part of the reason why this recent move was so strong compared to the other times we broke above that $41,000 range. And we're seeing this similar pattern occur multiple times in Bitcoin's history. It's not a one-off thing. We saw exactly the same thing occur in that July bottom, and we saw this resistance line here with multiple tests. All right, and the price was rising during this descending trend line, and then finally we had that breakout, which sent us upwards, and of course that indicated that bottom of the move. So the question is, guys, from here, where do I think Bitcoin's going to go? And I'm going to let Wolf talk about more of the bearish, I guess, target with the weekly and all that kind of. And Wolf, did you want to talk about the log scale and all that kind of stuff after?
Yeah, sure thing. I'm going to talk about the 3-day as well. I've got a 3-day chart that I want to bring up, cool. And then we can get into interest rates and stuff.
Cool.
Like that.
So I'm just going to talk about, I guess, a lot of people here. You guys are probably more interested in the bullish scenario right now that we are going up, and I just want to say that, of course, we've talked about our trigger zones, our targets, when you should enter, when you should exit. I'm just going to play into that and say we are going up and we have gone up, and if we get above 48,000, what can we expect? And I guess that's the next question. So if we do actually get above $48,000 here and we retest that zone of support, confirming that trend, that will be a perfect entry, of course. The question is, where do we think Bitcoin will go next? And like I said before, prices kind of ping pong. If you think like a ping pong table, they kind of move between support and resistances. And, obviously they consolidate between these support and resistances. Generally, when you have converging consolidation, it results in quite explosive breakouts. When you have parallel consolidation, it kind of results in weaker, less sustained breakouts. At the moment, we're seeing a parallel consolidation and breakout out of this ascending channel. So we don't expect the price to just rapidly explode like a 50% candle from here. It will be, if it does continue up past 48K, it'll be more of a slow and sustained move, which is obviously healthy for the market. It's obviously what we want. I think the next target for Bitcoin will be that major resistance zone at around $54,000, I think, will be the next viable target. Of course, that would be really good as we would flip that $50,000 psychological resistance. And that could set us up really well for a move to an all-time high if that occurs. And of course, it's a big if. We do need to break 48,000. We do need to flip it as support for that to even be even viable or considered. Did you have anything to say on that, Wolf? Or?
Yeah, sure. I'll bring up my chart as well.
Sure.
And we can talk a bit about that. And what I want to say briefly, I wish I could switch my tabs. It's just the screen sharing thing's blocked it, but I guess I'll just stay on this chart for now. What I want to say is that what's interesting about this move is that, yeah, it's undeniably taking resistance, but it is, quite low volume, and it is forming a very strange market pattern that I can say I've never seen before, or I see very rarely on like the lower time frames here. So it's an interesting market move, and it's definitely got something to do, let me just say, it's got something to do with what's going on with Terra Luna and all the buying going on with those guys and all the hype that's coming out of that, and obviously the hype from Russian energy companies and oil companies potentially accepting Bitcoin as payment or something like that. But there is a lot of news behind this pump, and for sure, I don't like putting the blame on pumps and dumps on news, because obviously the TA is more important the vast majority of the time. But there is a bit of a narrative forming for Bitcoin to be pumping here for sure. But what I want to talk about, I want to, not to keep it pessimistic, but I do want to talk about some of the stuff you need to be cautious about, because, we haven't flipped 48K yet. If that happens, TA is undeniably bullish at that point, in my personal opinion. You can't really say much too bad about the TA if you flip 48K. But what you can say is some pretty bad stuff about the macro situation in terms of interest rates. But before we get into that, the 3-day chart. I want to talk about the compression that's happening between the bull markets, between the Gaussian channel, between the 200 and the 50 on the 3-day chart. What we saw in 2018 is compression between the Gaussian channel and the 200. Eventually, when the 50 and the 200 crossed, we saw about a 50% correction. Very similar thing is happening right now, and that Gaussian channel was resting just at about 48K. And so again, breaking 48K is very important, not only on the daily chart, not only on the weekly chart, but also when you're looking at things like the 3-day chart and the structures and the patterns and the indicators that lie within that. That just gives you an idea of how versatile the importance of 48K is. It's not just about something like the weekly chart or something about the daily chart. This is a 3-day chart here as well that's showing the importance of 48K. Now, if we want to briefly get into something like interest rates, and this is going into a bit more speculative stuff here, right? Because the TA is the number one thing you should be basing any of your decisions off as a trader, for sure. I assume you'd agree with that, right?
I 100% agree. Like I've said before, and like we've actually mentioned in previous collabs, we've said that it doesn't really matter what triggers price movements in regards to what caused a resistance or a support to break. If it breaks, the price will continue in that direction until it meets another resistance or support, because price moves in supply and demand. I don't want to go over too much right now and take attention away from what you're saying, but in essence, you're 100% correct in saying that.
Yeah, correct. So the TA, before I even get into this, the TA is the most important thing. You should be basing all of your decisions, I'd say 80% based on the TA. There is room to consider things like macro trends and obviously news. But what I want to bring up is a bit of a macro situation here, and that's to do with interest rates in the USA, right? The Federal Reserve is consistently raising interest rates at this point, or at least they plan to. They've raised them once, 25 basis points. Jerome Powell's come out about a week ago, maybe 2 weeks ago, and said they're seriously considering a 50-point raise, which would be the first 50-point raise in, I think, 20 to 25 years, which is obviously a bit of a major thing there. Inflation is at record highs. They say 40-year highs. It's probably more like 70-year highs, right? Because the numbers have changed and the way they calculate that has changed since they calculated it back in the day. And so the economic threat in terms of recession is very clear, if not already started. I don't know what measurements are used to determine whether an economy is in a recession, but I would say that they're either very close to it or they're already in one, right? And with bond yields rising at such a rapid rate, in just 1 week, they've gone from 1.16% to 1.66%. You can see that there is a massive shift in market sentiment here over the course of since November, which, by the way, was when Bitcoin topped out, just to give you an idea of how the macro trends affect Bitcoin. There is a massive shift. People are expecting these interest rates to rise, partially because the Federal Reserve have said they're going to rise, but also partially because the economic environment has become increasingly more worrying to most investors here. And with something like the DXY, we have to kind of understand that the DXY is the thing that's going to benefit from this. And right, the DXY is something that is directly correlated to Bitcoin, reverse correlated to Bitcoin. Okay, so when this thing goes up, Bitcoin goes down. That's been established very well since 2017. And we can look into that closely. It'd probably take too much time. Just take my word from it. I've spoken about it many times, and you probably have as well. The reverse correlation here is pretty insane. If you break it down to a daily chart, generally speaking, if this goes up, Bitcoin goes down on the daily chart. So I'd say 70 to 80% chance or correlation there. So this is broken out of a 21-year triangle formation. It's also broken out of an ascending wedge formation, which is interesting because that's typically a bearish structure. But I suppose TA is kind of a backseat with a chart like this. And right now we're facing resistance on it, but it is still moving upwards. It is still an upwards trend as shown by the 21-year break. And so if we do enter a recession, and if interest rates do keep rising, which they most likely will, especially by 50 basis points, people are going to naturally flock to cash, right? They're going to put all their money in cash. They're going to sell all of their risk-on assets. We don't know what's going to happen to Bitcoin, but we know they're going to sell their stocks most likely.
Well, we've already seen that happen, haven't we?
For sure. It's already started happening, but acceleration of that happening is definitely due. And that means the DXY is going to pump, which according to the current trend means Bitcoin is probably going to show weakness or go down. I don't want
Yeah.
to rely on it too much, but that's what it means.
I also jump in there, and you mentioned, global recession, and you mentioned that you weren't going to cover that, but I just want to mention, if for those of your viewers who don't really know what kind of defines a global recession, essentially a recession is defined when you have a sustained or a drawn out period of negative GDP output. So that accompanied with a decrease in an increase in unemployment is what kind of defines, a recession, and in turn economic strength. So if we take a look at the current unemployment rate, particularly in the US, the US dollar is kind of the main currency globally, and what drives all of the major financial markets. And we've seen, the NASDAQ, S&P 500 kind of drop down a bit, as well as more traditional stocks like, Facebook, Amazon, PayPal, tanking 40-60%. If we look at unemployment rates, I know for a fact that it was around 3.6%, I think, in December 21, but it's a little bit over 4% now. So unemployment rates are starting to increase. If we take a look at the GDP, I do know for a fact that obviously with the financial markets dropping, the GDP is going to be dropping too, but I think it went from about 21.4 trillion. Let me bring up the data actually. 21.43 trillion. It's now around a little bit under 20 trillion. So the GDP is dropping, unemployment's rising, financial markets are dropping, interest rates increasing, and it is basically like the perfect storm. It's kind of all coming together. And like Wolves just said, the Feds aren't opposed to increase these interest rates, to 0.5% basis points. Like, they're not opposed to that. They are understanding the threat of rising inflations, although they do not publicly explain the dangers. They're not going to publicly come out and say this is a big problem, but it is a huge problem, and they want to kind of nip it in the bud and get it, and get it straightened out as fast as possible. Because obviously, with increasing inflation, increasing cost of living, with average income and average wage remaining the same, people have less expenditure, they have less free money. That decreases GDP. People aren't spending as much money. The money isn't circulating in the economy. Goods and services have to therefore increase in price because demand decreases, supply increases, the housing market starts decreasing. It's a whole snowball effect. And at the crux of all of it, you look at who owes the most money. Well, you look at housing market debt, you look at student loan debt. Well, the banks, they're lending so much money. The government, they owe so much money and there's so much debt. They start pumping these interest rates too quickly, they're gonna have to pay back more than they can afford. So it's kind of between a rock and a hard place. Between the government, they can't allow the interest rates to increase too fast, but then they can't also not allow the interest rates to increase at all because the inflation increases too fast. It was like, at what point will the financial markets just crumble? Because it's bound to happen. I think
that's correct. Yeah, and that's why again, we need to be trusting the TA, but at the same time, there needs to be that in the back of your head.
I think that current global economic environment has to kind of set the scene for your outlook on the long-term perspective of the charts. And like I say, if you break a major resistance or you break a major support, yes, the price will continue, and you can capitulate on that, you can capitalize, you can trade that, you can make profit. But you still have to be aware that when these interest rates rise, it's hard to determine now what effect that will have on the market until it happens. But we have to assume that, just as it's happened every other time in history, rising interest rates result in decreases in risk asset prices. It's just how it is. People take money out of these risk assets. And Bitcoin has never seen a global recession. We've never had cryptocurrency through a global recession. We don't know the effects or the extent. We actually don't really know how Bitcoin will react. The basis that it's going to decrease is kind of on the basis of categorizing Bitcoin and crypto with all the other risk assets. But we actually don't know truly how Bitcoin's going to respond if we go into a much longer, and I'd say much more extended, financial recession. It'll be very interesting to see. We have to play it by ear.
For sure. And I think I've been saying on my channel quite a bit, this whole thing goes with the saying, invest with the trend until it ends. And right now, like it or not, in my opinion, the trend is Bitcoin acts more like I don't know, something in the stock market or the forex market than its own individual. The point is, it's very correlated to what other things do. It hasn't reached the point where it's not correlated to what other things do yet. And so, we have to assume the worst to a certain extent on the longer time frame macro picture, as long as this threat of a recession is there. That's what I would say.
100%. And I want to bring back my my short-term Bitcoin chart for you guys, just to show you the possible threat of a decrease here. And I want to just emphasize, we've already talked about how important it is to cross, sorry, I don't know why I brought up the text, how important it is to cross 48K. We've talked about it a lot already. But what I do want to say is, we don't have a lot of time between right now and that zone. We don't have a lot of time. We can't just consolidate in here for like 2-3 days. It has to be quite a rapid move, meaning we have to get over 48K fast, or we risk a threat of printing inverted hammer candle, on this daily chart here, which is going to close red under this trend line and send us back down. And I did actually mention before that if we lose $45,000, we will crash. But I think if you're not in the market right now, for a lot of people watching are probably not in the market or very slightly exposed to the market, I would not be entering the market now. I would just wait a little bit, and I can show you why. We've already indicated where our long-term target would be, or should I say our next impulse should be for Bitcoin. It would be at 54,000, right? So bringing this reward up to 54,000, move this line a little bit, and say we enter upon the break at 48K, we enter a little bit higher. So we enter 48,100. Where we put our stop loss? Well, we put our stop loss underneath the resistance range as well as this uptrending support. So it'd be about a 2.5 to 2.35% stop loss for a 12.16% reward. Instantly, your risk reward ratio is 5.17. Quite a favorable trade. Now, if you had to enter the market now, sure, you've got a pretty good reward. You could go 15%, but your risk reward is going to be decreased because you need to put your stop loss underneath that previous major support zone. Instantly, your risk reward ratio drops to 3.53%, 3.53. All right. Not only that, but you're also taking on higher risk because your stop loss is 4.32% lower than the current price. And do you see how, as a trader entering now based on that logic, is a less favorable move? You want to be trading based on lower risk, higher profit, greater risk reward, not the other way around. So anyone who's not in the market now, don't panic, don't FOMO, don't freak out. The market is ever moving. It's 24/7. It will continue tomorrow, the day after, the day after, the day after, the day after. There's always a new opportunity in crypto. And I think you shouldn't get caught up in the day-to-day. If you miss a move, you miss a move. Worry about tomorrow. Worry about the next day. Not a big deal. There's plenty of days where I do not trade the market at all and the price goes up and I don't care, because I know that when I do trade and when I do enter trades, I'm entering on confidence, I'm entering on supported data, and my risk reward ratios are very much favorable to the point at which I succeed 80% of my trades. So Wolf, would you think that's like a smart, you would also advise your followers who are watching this 100%. Video to kind of wait for the confirmation before like FOMOing?
That's correct. Everything in this, as we both say it, I'm pretty sure everyone says this at this point, everything in this financial market is based on probabilities, not certainties. There's always going to be a probability that something plays out, but you want to be trading when there's the highest possible probability of your favored scenario playing out. So if I bought Bitcoin down at 33K on the first day that it got there, there really wasn't much signs of it pumping at that point, but there was a probability of it, and someone might have done it and they might have gotten lucky. But the point is, they took a massive risk in the process, and that's not favorable over a long period of time, right? So you need to be consistently putting yourself in a position in which you have a good risk reward ratio over the long term, because you might be right occasionally, but eventually if you have bad risk management, it's going to come back and bite you in the long run. For sure.
100%. And I also want to mention that, I've seen a lot of people, be like, oh, you called this, or Wolf, you were saying this, or Wolf, you were saying that, now it's gone up. I just want to say, and it kind of cover all the people who are looking very, very, I would say, narrowly at the market. You always want it doesn't matter what your bias are. It doesn't matter if you think it's going to go up or down. You should always look at both scenarios, bullish and bearish. It doesn't matter, even when the price is over 48K, I'm going to be looking for signs of reversals the entire time. I'm going to be looking for bearish signals the entire time. Because if you do not look for the opposite of what you expect to happen, and that occurs, because there's always a risk that it occurs, you will not be prepared to react to that scenario, all right? And if you're not prepared to react to a scenario that you haven't planned for or you're not aware of, you end up holding your bag because you're not sure what to do. And that's how you lose 20, 30, 40, 50% of your portfolio net worth. So having these bearish scenarios, even though the price has gone up on a short term, having these bearish outlooks or these bearish scenarios that are logical, have data to support them, and are planned, concise with trading strategies, even if they don't play out and even if they're completely wrong, not having those scenarios or not talking about or bringing people aware of those scenarios is not doing you any good. It, like I said, it's like looking at one side of the page and not considering the other. There's no guarantee that your scenario is going to always play out. You have to always look at the flip of the coin. So even now, Bitcoin's gone up, you know, we've been bullish short term, but we've always had in the back of our mind, we've always had a plan for if it goes down, this is what's going to happen, this is how we're going to prepare, and this is how we're going to react. And the same thing, if we go upwards from here, we've got a plan, this is how we're going to react, this is what's going to happen, this is what we expect. But if you just look at one side, you know, a lot of people on crypto Twitter are just bullish, or a lot of people on Twitter are just bearish, or a lot of people are looking at Wolf's channel or my channel and say, oh, you're just bullish or you're just bearish. But it's more than just looking at one piece of data. And I think I just want to close on that. For me, I don't think I've got anything else to say. I think always take a look at the bullish and bearish scenarios, because the reason me and Wolf predicted, you know, both of these tops almost perfectly and this bottom almost, well, basically perfectly, all right, was because we were looking at the bullish and bearish scenario the entire time. Do you really think that I would have been able to predict this drop here and the top if I was only looking at bullish scenarios? Even though the price had been going up for like 4 months, I was still looking at bearish scenarios the entire way. That is how I predicted this drop. All right, and just when Bitcoin goes down, Bitcoin's been going down, went down this entire time. All right, this entire time. I wasn't just looking at bearish scenarios. I was looking for signs of reversals. I was looking for possible points of reversal. I was looking for bullish scenarios the entire time. So then when I actually saw something that met my criteria, which was a bullish divergence on RSI and a nice huge bullish engulfing candle, all right, that's when I realized the trend has flipped. And we literally posted on that day that we're bullish again. Well, the whole entire market was calling for like 15K. So, and the same thing's happening here, guys. Be aware, be prepared. Wolf, I'll leave it to you. I'm pretty much said everything I want to say. If you want to close anything off.
Yeah, I suppose I'll just kind of instill that point a little bit further in saying that, you know, at the end of the day, our channels are very much, well, my channel, I'll say, is very much dedicated to the average trader, right? For someone who has a kind of average level of experience, I think that the average trader should be trading with the macro trend. I don't think the average trader should be trading short-term moves. I think if the market is macro bullish, the average trader should trade in a bullish fashion. If the market is macro bearish, they should be trading in a bearish fashion. That's why whenever there's a bull market, I sound more bullish. Whenever there's a bear market, I sound more bearish because I want the average trader to be trading in that fashion. However, I can say that both me and you, and specifically me in this conversation here, I have had my invalidation points the entire time I've been saying these things. I encourage people to look past the titles of videos and look past the thumbnails and actually look at the content, right? That's what I'd say. Anyway, I think that's it.
Yeah, so that's about it, guys. So remember, follow us both YouTube, Twitter, Telegram. All links will be in the description. I'll put in my video, if you're watching this on my channel, guys, I'll have Wolves of Crypto's YouTube and Twitter. And do you want your Telegram linked as well?
May as well, yeah. I'll chuck all your stuff in as
all
well.
linked in the description as well below. So if you want to find out more about the macro trends and you want to talk about macro trends and stuff, you know, go ahead and follow Wolf. He's great with that kind of stuff. He posts daily. And of course, if you want to follow, well, Wolf, you can talk a little about me if you want.
Sorry, what was that?
Wolf, if you want to just let him know that you'll have my links or something.
Oh yeah, I will definitely have his links in the description below. He's got an amazing Telegram channel as well, especially the VIP group, and also his free group posting good content in there. And then a pretty similar format with the YouTube uploads, but he also covers quite a bit more altcoins than me as well. And obviously he has a different outlook. We're not the same person. We do work quite closely, but we don't have exactly the same outlook. You know, many times we have been in different kind of biases, and so it's good to have two different opinions. And you know, if you guys trust us both, that's great. And then you can come flip-flop between us and check out all the information and compare what we're kind of analyzing. It's kind of a great little community that we're kind of building together, I think. So go ahead and check him out for sure, and I'll leave his links in the description.
Cool. And I think, did you want to announce the thing? I don't want to say anything before we agree. Did you want to announce what we're kind of working on?
I think we should. I think we should announce the date or the supposed date.
All right. So I'm not too sure what you mean by that. Do you want to take the lead on that one?
Okay. So essentially, I don't want to give too much away, but we have been you guys would be aware by this point. Most of you who are going to be interested would be aware. But we have been working on a. I sound like it's an understatement when I call it this, but it's essentially a learn to trade course. Now, it's so much more than that. I've personally never seen anything quite as advanced and extensive and as helpful as what we're building right now. We're putting in countless hours per week. I reckon about 5 to 6 hours a day, both of us individually putting into this course to build something that's truly, something that no one in the space has seen before. I don't want to give too much away, but what I can say is that within the next, I'd say 2 to 3 months, probably leaning towards 2 months, this will be available, and no doubt we'll have more information on that probably within the next month. And I'm excited to announce that to a bigger extent as well. So get keen.
Cool. All right, guys, so that's it. We'll wrap it up, and we'll catch you in the next one.
See ya.